Hey there, Tiffany Thomas with wealthytiffany.com, and in today's video, we're going to be talking about the 8 different criteria items that I look for when I am choosing a real estate property to invest in. And before we dive in, if you guys are ready for financial freedom right now, comment freedom below in the comments, or give me some other type of comment to help out the YouTube algorithm so that we can get this video out to more people. All right, you guys, the reason that I'm talking about this today is because I've gotten quite a few questions from different people about what I look for when I'm choosing an investment property. And I have 4 properties so far, and I just want to go over the criteria that I use to purchase most of these properties. And the first criteria that I look for is location. I'm sure you've heard that before, location, location, location. And it is very important. I like to choose an area that is in a good, safe neighborhood, that is nearby the freeways and nearby the canyons, nearby the airport, and it's not in the heart of the big city of downtown Salt Lake City, but it's about 15 minutes away from downtown Salt Lake City, where a lot of people work, or they go to school downtown. So I choose a location that's pretty central to a lot of different things. And going along with this, I choose an area where I would like to live. So I'm not looking in sketchy areas. They are good, safe neighborhoods. And all of my properties, including the one that I live in, are all about 10 to 15 minutes within each other. So they're pretty close. They're in really good central locations. And that's what I look for when I'm looking for a location. And also areas that are up to date and well kept. So that's kind of the location that I look for. All right, and then criteria number two is having newer properties. And I'm not talking about brand new properties, although I'm not opposed to that. They're just more expensive. But I like properties that I'm not going to have to do immediate updates on, that they are move-in ready. So the last property that I bought was built in 1997. So it's not a brand new property, but it was super nice and it's been well maintained, well kept. And I didn't have to do anything to it. I bought the property and the people that I bought it from, they actually lived in it for a month after. And then I immediately had people move in right after the couple had moved out that had owned it previously. So it was just a move-in ready property, and I like that. And when you purchase newer properties, you're going to have less maintenance on those properties. So you're not going to have a high expense when you're looking at trying to fix things, or if you have to buy a new furnace or a new fridge, things like that. If they're newer properties, your expenses are going to be lower. And the third criteria that I look for now is actually larger properties. So at least 3 bedrooms, if not 4 bedrooms, or even more, because my strategy is to rent to single females. So I rent out each room separately. So the more rooms I have, the more tenants I can have, the more income that I can get. And if I'm buying a larger property rather than 2 smaller properties that are each 2 bedrooms, if I just have the one property that's a 4 bedroom, I only have 1 down payment, 1 mortgage payment, and 1 property to maintain. And when I'm showing the place, I'm only going over to that 1 property. So that's my new criteria. The first strictly investment property that I bought was actually a 2-bedroom, 2-bath condo. And it's been a great investment, and I'm really glad I started that way. I just wanted to start with something really simple. And that's been great. But my strategy going forward is to buy a property that's larger, that has more bedrooms. And going along with the bedrooms, I also take into account the bathrooms, since I'm renting to single girls. And I only have 2 girls sharing 1 bathroom. So most of the places, like my place that I live in now, only 2 girls share 1 bath, and then me and my other roommate, we have our own bathrooms. So I do look at that, since I'm not renting to single families. I want to make sure that there's not 5 girls sharing 1 bathroom or something like that. And then the 4th criteria that I look for is parking. And this is because I'm renting to single females. They're all going to have their own car. So if there's not parking for 4 girls, if it's a 4-bedroom place, then it's not going to work for me. So that's another criteria that you may not include when you are looking for your investment property, if you're not going to be renting to singles, but that's something I definitely look for. And when I was buying the property that I live in now, just a few years ago, I looked at a lot of different properties because I was looking at townhomes, and there are not a lot of parking spots in a townhome complex. So it was kind of difficult to find one that would actually allow extra parking for my roommates that I have. So that is the fourth thing that I look for. And the fifth thing that I look for is if I'm buying a townhome or even some single family homes, but if there's an HOA associated with it, sometimes they don't allow roommates or they don't allow rentals. So that is another thing that I look for, is if I'm okay to rent to, singles. And also, some of the city codes, they don't allow more than 3 single non-related people living together. So you want to take that into consideration if you're going to rent to singles. And number 6 criteria is cash flow. I want a property that's going to give me positive cash flow right away, because that's what I'm looking for right now. As I have already achieved financial freedom, lean financial freedom, I am looking for extra cash flow that will bring me to full financial freedom. So I'm looking for properties that will give me that immediate cash flow. And I know that there's other people that are doing fix and flip properties, or cash flow isn't that important. They just want to break even. But that is one of my criteria right now, is that positive cash flow. And that brings us to criteria number 7, which is pricing. And I'm sure this is the one that you are most curious about. And I'm going to try to keep this as simple as possible. So with pricing, I am looking for that positive cash flow, like I had said. So I want to make sure, first off, that I can actually afford the down payment on a property. And if you're buying strictly a rental property, just an investment property, you're not going to move into it, you're going to need 20% down. So 20% of whatever the sell price is on the home, you're going to need that amount for your down payment. So I want to make sure that I can afford my down payment for the property. And I'm also going to look at comparable rent prices in the area that I'm looking to purchase a home. And since I have all of my homes within about 10 or 15 minutes of each other, I know the pricing around here. And honestly, I have the app, the Utah Real Estate app, downloaded on my phone, and I check it all the time. I'm not sure I'm going to be buying a property soon, but I want to know where the market's at. I want to know what homes are selling for right now. And since I have rooms coming up quite often, not super often, but every once in a while I have new rooms that I'm going to need to rent, I keep my eye on how much rent prices are. And I'm part of a Facebook group that I post my housing ads in, and I can see how much everyone else is posting their ads for. And when I bought this last property just last year, I went on Zillow, and it's a site called Rentler. It's part of KSL. It's in Utah. It could be something like Craigslist. But I went on these websites and I looked to see how much people were charging for rent for a property comparable to what I was looking at purchasing, so that I could make sure it was going to be a positive cash flow. And with that, once you figure out what you can rent the property for, then you want to take a look at all of the expenses that go into owning this property. You want to take a look at your mortgage payment, what that's going to be. If you have PMI, private mortgage insurance, if you're not putting 20% down, if you're moving into the property, you want to take that into account. You want to take into account insurance and taxes, which are normally included in your mortgage payment, but make sure they are if you are running numbers. And then look at the HOA fee. If there's a homeowners association fee with the property that you're looking at investing in, you want to take that into account. And you also want to take into account utilities if you are not going to have your renters pay your utilities. And I have my renters pay some of the utilities, but I take care of water, sewer, garbage. So there are utilities that I'm covering. And also the house that I bought last year, it has a yard. So I cover the lawn care. So that's another expense. So you really want to make sure you're including all of the different expenses that are going into purchasing this property. And another thing that you want to make sure and do is include kind of miscellaneous expenses. If you do need to fix something, or if you need to replace something, if you're buying an older property, you want to take those expenses into account. And it's kind of hard to say how much that's going to be. And also, if you're going to have the place be vacant for a couple weeks or a month, whatever you think it might be. To be honest, I use maybe a 5% of the rental income for my kind of these miscellaneous expenses and the vacancy. Since I am buying in good locations, I really haven't had a problem getting my properties rented, and I haven't had them vacant for a long period of time. So I am able to receive that income. But if you are buying somewhere more obscure, and you think that you may have a longer vacancy, then you can increase that percentage. So you just have to, do something that you feel comfortable with. And if it is an older property, then you're probably going to have to be fixing a lot more things. It's hard to say a percentage, and you can do some research online. There's plenty of websites out there that will give you recommendations. That's just what I found to work for me, is about 5%. And then as far as the actual number that I'm looking for, I look at the cash on cash return, because like I said, I'm looking for a property that's going to give me cash flow, and I'm also holding for the long term. So over time, the property is going to appreciate. It's going to go up in value, and I'm going to be paying off my mortgage over time. So eventually I won't have a mortgage payment. I'll just be paying the taxes and insurance on the home, and that mortgage payment, that principal and interest, are going to fall off, which is going to increase my cash flow. So there are a ton of different formulas that you can look at. And here's what I want to say about this. It's good to run the numbers. For sure, you want to run the numbers. You want to do your homework, make sure that the numbers are looking good, the cash flow is where it's at. And what I look at is the cash on cash return. So this is taking your net operating income, which is just your rental income that you are receiving, minus all of those expenses that we talked about. So you're going to take that, we're going to use the example of my condo that I bought. So I charge $1,200 a month in rent for that condo, and then I subtract out the monthly expenses that I have on that property. And over the full year, my total gross rental income is $14,400. We're taking that $1,200 per month and timesing that by 12, because there's 12 months in a year, and we're getting $14,400. And then I'm going to minus out all of those expenses. So that is the mortgage payment that I have, the miscellaneous expenses that I have, the HOA payment, all of those types of things. We're going to minus out all of those expenses, which I actually looked at the numbers, and it was $9,450 for this past year. So we're going to take that $14,400 minus the $9,450, which is going to give us a net operating income of $4,950. And then we're going to divide that by the cash that we put down on the property. So the down payment that I put down. And that would also include if you paid closing costs for this property. My purchase price for this property, for the condo, was $24,290. So I'm going to take that $4,950, divide that by the cash I put up to invest in the property, which was $24,290. And that gives me about a 20% cash on cash return. And that's the number that I look at. Now, a good cash on cash return is anywhere from about 8 to 12%. But it really depends on what you're looking for and how the market is right now. So the market has gone up significantly. It's quite a seller's market right now. So prices are crazy high and things are selling really quickly. So it's hard to find a good deal. So you just want to be comfortable with the numbers that you are getting. And when I bought this condo, I felt really good about a 20% cash on cash return. So it was bringing me in cash flow, and I'm making this 20% on my down payment for the property. And since I'm holding it for the long term, I can continue to, analyze this each year, and I can still feel really good about my investment that I have made, because I leveraged a chunk of this money by taking out a mortgage and just having the 20% down payment. Now, with my property that I bought just last year, my single family home, that was giving me a 12% cash on cash return, which is quite a bit lower than the 20%, but the market is so much crazier now, and I feel really good about a 12% cash on cash return. So that's just one number that you can look at, and you can Google a whole bunch of other formulas that you can take into consideration, but that's one that I find important. So I want to make sure that I have a good cash on cash return. I want to know what my investment's going to be bringing back for me, and I want to keep that positive cash flow. And honestly, I like to keep my investments as simple as possible. I look for good properties, and when I find one, I run the numbers, and if the numbers look good, then I consider that property. And then criteria number 8, the last criteria, is I do kind of a gut check. So once I've run the numbers, I've done my homework, I think it's going to be a good property, and I do that gut check. And do I feel good about this purchase? Is this a purchase that I'm not going to regret later? And honestly, I am a spiritual person, so I will definitely pray about the properties that I'm purchasing. But you guys, you have to feel good about your investments, and don't be bullied by anyone else, or let them run your investments. And just to share an experience, when I was purchasing my condo, I put in my offer and they came back, they counter offered. And so I went back with another offer and didn't come all the way up to what they countered at, but I came up a little bit to where I felt comfortable. And then they came back and they said, no, that's not good enough. And, I talked to the people that I was working with, and they kind of said, well, it's, it could still be a good deal, but I didn't feel comfortable with it. So I just kept my offer the same. And they ended up coming back and saying, okay, yeah, we'll do the deal. So you just have to feel good about your decisions. And yes, get advice from those that actually have done this, that know what they're doing. But all in all, it's your decision. So you're the one making the final call. And if you don't feel good about it, even if the numbers look good, then don't do it. And going along with this, don't be stuck in fear either. It's a scary thing to buy properties. When I bought my first property, I was constantly thinking about it, and I couldn't fall asleep some nights. And, I was thinking all of the worst case scenarios, and thinking, oh my gosh, I'm going to be in so much debt. Like, all of these thoughts are running through my head. But all in all, I knew it was a good investment, and I felt good about it, even though I had these fears that were coming up. So I didn't hold back and, be consumed by the fear. I knew that it felt right to me, and so I went ahead and did it, even though it was scary. So, when you're doing this gut check, of course it's going to be scary, but you can tell, yourself. So you can tell if you're just being, kind of silly, thinking, oh, I don't know, this is too much. Or, yeah, it's a good deal, even though it's going to be scary, and you can still move forward. That is number 8. That is the last criteria that I look for. And these are the most important things that I find when I'm looking for a property. So hopefully this was helpful. And if you guys have already purchased properties, comment below and tell me what your criteria is, what you look for. And if you found this video helpful, please hit that like button, and please subscribe to my YouTube channel. That will really help me out, and we can get this video and my channel out to more people. And if you guys have other ideas about content that you would like me to create for you, please put that in the comments below. And just as a side note, if you guys are looking to get 2 free stocks, Webull is running a promotion right now where if you open an account, you get a free stock, and if you deposit $100 into their brokerage account, into their stock trading account, you get another free stock, and it's up to, I think, $1,000 or $1,500. I can't remember now. But I'm going to leave my referral link below, so if you are interested in getting those free stocks, feel free to use that link, and I will see you guys in the next video. Thanks!